YouTube, what's good? It's the Disciplined Trader coming at y'all with another video. Make sure y'all like, comment, subscribe if y'all is new to this channel. Make sure y'all join TDT Trading Community. First link in the description and follow me on X at Markell Simons underscore so y'all can stay tuned and y'all can just grow as an individual trader. If y'all are struggling, if y'all want to become profitable, join the community, follow me on X, and just soak in all the knowledge and the experience that I have, right? And yeah, just strive to reach profitability by joining my community. It's free. You don't have to pay nothing. And yeah, I literally give y'all free setups every single week where y'all can make 10% a month easily. Literally, check my track record. Go on X, scroll. You know what I'm saying? Scroll. Yes, I take losses. Every trader takes losses. It's part of trading. But over a series of trades, I am profitable. Now let's get right into this trade recap. So I took a trade on Sui, right? As y'all can see, on Sui, we're in a downtrend, right? The whole market, was going lower. But then we started kind of accumulating, right? We came towards a demand POY to our left, right? I deleted it off my chart, but we bounced from a small demand POY. And, we kind of had like a high probability accumulation schematic, kind of, right? It wasn't the nicest return to zone locally, right? Because we had such an aggressive move right here. This move right here was kind of aggressive, but looking at your market structure, if you would have entered this trade setup, right, for the long position, you could have entered on your breaker structure right there, which stop below this tap because we mitigated demand, so we shouldn't come back, right? And if we come back to this demand POY, we should get a strong bounce because this is a demand chain, right? So you could have entered with your stop below this low, and you could have targeted the range high, which is the technical target of an accumulation schematic for a 5% trade, right? For a potential 5% setup, right? Um, I think you probably only would have been able to make probably, I mean, somewhere between three something percent, right? Depending on how you manage this trade, if you managed it properly, and if you was aware of this distribution schematic that I took. I didn't take the accumulation schematic. I came on the charts, right? And I seen that we were getting a move up, but I already had missed the entry, right? I'm not chasing price. I am the disciplined trader. So why am I chasing price, right? That's why I changed my name to the disciplined trader. That's why y'all see my chart colors is white and black, right? I'm using gray, white and black. You know what I'm saying? I'm not focused on profits. I'm not focused on trying to look good. I'm coming to the market, staying disciplined, trading from consistently successful traders perspective, right? Thinking like a professional, not just like a gambler, right? So what ended up happening was we ended up having that move higher, right? And then this is where I took my trade. So at this moment in time, once we got that low time breaker structure, we're creating higher lows and higher highs, right? So as y'all know, whenever you're in the uptrend, you always pull your range from top to bottom, right? So this would have been your initial range high, this would have been your initial range low, and this would have been your mitigation of the equilibrium of the range confirming this range. What ended up happening was we ended up deviating the range high, right? Now, this might not look like a deviation for some people, but with experience and just, seeing this type of price action, and understanding that when you look at your DL tool, this is a deviation on a higher time frame, right? You can go to the highest time frame that this market structure is valid, which would be the 15 minute. As y'all can see, we had one candle close above, but then we had an aggressive expansion back inside the range, right? Coming into this demand POI, bouncing from it, but having a slow grind up, leaving all these higher lows intact. One, two, three, four, right? Having all these higher lows, which indicates a potential reversal, right? Because we're taking the highs and leaving the lows intact. So at this moment in time, I extended my range towards my second tap because if it was closer, I would have kept it. But since it was so high, I wanted to look at this as a range and I wanted to look nicer on my chart, right? So this was my second tap. Now, if you go to the lower time frame, this would have been, we ended up having a supply POI that got created, right? And we rejected from that. After seeing this supply creation and seeing you know the aggressive move back inside the range, this showcases to me that market makers are potentially filling short positions to have a reversal, right? And that this model one accumulation schematic is potentially going to fail. Now, looking at price action, we ended up coming up for our extreme liquidity, right? So from a third tap perspective, if you look at, let me see, is it a 3 minute, 2 minute? So if you go to the 2 minute time frame, you can see that we had a low, a high, a lower low, and then we came back and we grabbed liquidity, right? And once we bounced from this supply POI and had this move down, this would be our extreme liquidity POI to look for a sweep of that liquidity POI for a potential Model 2 accumulation, right? The difference between a Model 2 is we just grab extreme liquidity or we tap into extreme supply. A Model 1, you deviate that range high once more, and then you get your breaker structure confirmation to go short where you target the range low, which is the technical target of a distribution schematic. What ended up happening was we grabbed extreme liquidity, right? We had a nice sell side liquidity PO. I mean, we had nice sell side liquidity locally. This was actually trend line. Is this trend line? Yeah, this was trend line sell side liquidity. Nice. Let me fix this. So at this moment in time, once we grabbed our sell side liquidity, as y'all can see, in order to confirm this as a Model 2 distribution schematic, all you have to do is break structure between tap 2 and tap 3 back to bearish in order to confirm this model, right? This being your tap 1, this being your tap 2, and this being your tap 3. Your tap 3. All you have to do is break structure from the lowest point coming into your third tap POI, right? So skipping over all this market structure, if you just look closely, you can see that we had a higher low for a higher high right here, right? So all we have to do is wait for a breaker structure confirmation, and then we can go short. At first, we had an SFP. We didn't break it, right? But then we got to move higher, and then we had a very aggressive breaker structure back to bearish. When I seen this breaker structure back to bearish, I knew that this trade was, this was a confirmed model. This is my model. This is what I'm looking for, right? I'm pre-planning it. I'm watching it. This is exactly what I'm looking for. We have a 1, we have a 2, and then we have a 3, and we got our confirmation to go short. So I took one trade, right? My first trade that I took ended up taking it off of this supply mitigation, right? We had a 1 minute supply POI. I took this off of this supply POI. I went short with my stop above that high, right? Targeting the range low. Seeing all this buy side, all this sell side liquidity below us, giving price a reason to go lower, right? This was my first trade setup, right? The actual invalidation is your third tap. So really, I should have put my stop loss above here, right? And that would have gave me a 3.59 risk to reward setup. I would have had one trade and I would have hit TP in this one trade setup, right? Never would have had to take a loss. But I put my stop loss above this high. Now, looking back on it and after journaling, right? I'm not going to do that no more. But because we had buy side liquidity up above, we came back for that liquidity, right? And one of the things that I learned when I first started trading is never take a short position with liquidity above, right? In this position, I took a short position with liquidity above. Nothing wrong with taking this short position, but my invalidation is not this high. I use this as my invalidation just to get a higher risk to reward setup. Now, I actually had like a 8 point something, so I think I entered once we got the move lower. Once I seen it like rejecting, then I entered because I think I had like a 8.5 or something like that. But ended up getting stopped out. After I got stopped out, I seen that we grabbed liquidity. And I was like, hold on, this could be looked at as a LPSY where you get that last point of supply, right? But you can just use it as a liquidity. It can be liquidity or it can be supply where you come up and you mitigate the last supply POI before going lower. But in this case, we grab liquidity. Once I seen that and I seen price rejecting, that's when I entered my second trade, right? I'm not sure where my actual entry was. I think it was like right here, kind of in the middle of this, right? And I put my stop above here because now this is an invalidation because this is part of our model. This is just a model 2 that gets extended to where this is your LPSY. We should not come up and take this high. If we take this high, more than likely this model is going to fail. And then I targeted the range low. Now, where did I enter this trade? Let me actually check because I had a 3 risk to reward set up. I had like a 3.33. So I entered it like kind of right there. Yeah, that's where I entered. So I entered right there. I had like a 3.33 risk to reward setup. And boom, as y'all can see, we had a small pullback, right? I just stuck to the plan. I told everybody in my Telegram, and all I did was I set and I forget. I'm gonna pull it up right now so y'all can see. Um, as y'all can see in my Telegram, I gave everybody the entry as soon as I took it. This was the first trade that I took. Wait, is this the first one or the second one? Oh yeah, so this was the first one, right? 8.58%. I was trying to get a high risk to reward setup, and that's why I put my stop loss right there. Now thinking about it, right? Because it's like, why would I put my stop loss right there unless I'm trying to make more money, right? When I should have put it below the invalidation. So I journaled that, and now I won't make that mistake again. But I was like, quickest stop out of all time. And then, as y'all can see, we got liquidity, and I entered right there. I put it 3.5573. So three, oh yeah, perfect. That's perfect. That's exactly where I entered. And then I said this could be looked at as an LPSY. We need to see follow through now. And yeah, as y'all can see, I said I'm in the short, set and forget. I'll journal after the trade gets stopped out or it hits TP. You know what I'm saying? I didn't risk too much. I made sure I risked the proper amount. And then a few seconds later, as y'all can see, we ended up getting the move down. I told everybody I moved my stop loss to break even. Now it's a risk free trade. And then trust the process, you know what I'm saying? Because we ended up having that move down. Now, that's the trade setup. It's very simple, right? My model is very simple. How I trade TCT concepts, right? I studied for this, right? Even on the move higher, we created even more higher lows, right? More liquidity. And then looking at price from a volume perspective, look at the volume perspective. We deviated our range high, our volume area high and got a move back inside. So once we get acceptance back inside our volume area high, that can indicate a rotation all the way towards our volume area low, right? So that's just extra confluence. On top of that, I used the majors, BTC, USDT, and total in confluence, right? Just to make sure that I'm taking the highest probability setup because I understand that we are in the confirmed accumulation schematic where the technical target is the range high. But if you start seeing this distributive price action, you get your confirmation to go short, you can go short. Now, I think we also came into some type of supply. Let me double check just to be aware. Did we come into supply POI? Uh, nah, we didn't come into supply. Okay, we didn't come into supply. I think we just came towards the volume area high of this mid time frame range. Yeah, so we were like near the volume area high. But that's about it, man. That's the trade setup. I'm not gonna make this video too long. Uh, it was a beautiful setup, right? My plan was to hold this entire trade, right? Now, I'm gonna give y'all a little extra juice too, a little extra sauce. So what I did was I decided to hold my entire position because I felt as if this trade was gonna fail. Honestly, I felt like this trade was gonna fail. I kind of should have took a TP at this technical target, at least like a 25%, 30%. But like I said, I wasn't risking a lot, right? I used low risk on this setup. So I was like, you know what? I'm just going, let the trade play out because I think we have potential to go lower. Now, on the move lower, we ended up creating. supply above, right? So this would have been our supply POI from probably a 15 minute. 10, 5. Okay, so 5 minute, right? Got the two bearish candles, then we got the two bullish candles. These two bullish candles, you could use this as your supply POI, right? So when price started coming back, I didn't try to close my position. I didn't move my stop loss to break even. I just kept my stop loss above this supply POI. Like I said, it comes with experience. Um, as y'all can see, we ended up getting the move lower. Once we kind of got this move lower, I ended up closing 75% and then taking a 25 or leaving a 25% runner. Now, the mistake that I kind of made was I then moved my stop loss to this high. I moved my stop loss to this high because I was like, if we take out this high, more than likely we're going to take out all these highs. That's what I told myself. So my 25% runner ended up getting stopped out, which sucks because price ended up running. As y'all can see, my stop loss was right here. And what happened? We ended up coming all the way to my stop loss, stopping me out, and then getting a crazy move lower. Right? It's crazy, but it's part of the game. So yeah, this is a trade recap. Hope y'all enjoyed it. Hope y'all able to, take some knowledge. And like I said, if y'all seeing this video, make sure y'all join the Telegram. I'm about to go live with the team and I'm about to, look for some high probability setups. And yeah, hopefully we able to find some. But shout out to everybody who watched the video. Make sure y'all like, comment, subscribe. It's your boy, the Disciplined Trader. I'm gonna catch y'all in the next video. I'm gone. Peace.